Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Monday, September 29, 2008. In New Zealand, the trade deficit shrank in August to 750 billion New Zealand dollars. Economists had expected the deficit to widen. In Japan, the annual pace of retail sales rose 0.7% in August, higher than expectations. Still, the pace was lower than in July. Also, large retailers saw a sharp 2.2% decline in sales. Risk aversion dominated the currency markets to begin the trading week. The New Zealand dollar-Japanese yen pair, which is used in carry trade, fell throughout the opening session. From a high near 73.40 following the New Zealand trade balance release, the pair slid more than 300 pips to trade near the 70 level as global stocks were lower on continuing turmoil in financial markets. The second leg to the decline came after the U.S. House of Representatives rejected the bailout plan. In Europe, the retail PMI edged down again, posting a 46.2 for September. It was the fourth consecutive month of declines. Retail executives are seeing weaker sales in the face of waning consumer purchasing power, falling confidence as a result of the current financial crisis, and a more pessimistic outlook for the economy. The Eurozone Economic Sentiment Indicator dropped to 87.7 in September compared to its 88.5 level in August. That's the lowest this index has been since November of 2001, with activity in services and industry declining and consumer confidence remaining flat. The euro weakened sharply against the dollar overnight. In addition to the weaker sentiment data, Belgium, the Netherlands, and Luxembourg bailed out Fortis to restore confidence in the company following a 35% drop in its share price last week. With the credit crisis not contained within the U.S., the value of the euro was pressured. From its close around 1.46 on Friday, the pair was down 300 pips to test 1.43 in overnight trading. The dollar paired its rally on the euro in the New York session as the bailout plan failed to pass. In the UK, the number of mortgages approvals fell to 32,000 for August, with mortgage lending falling to a record of £143 million. The data shows that UK housing recession is only getting worse. The pound fell against the dollar by the most in 16 years following news that the UK government seized Bradford and Bingley, Britain's largest lender to landlords. With the weak lending news as well, the pair was down 450 pips from Friday's close to today's low near 1.7960. In the US, personal spending was flat even as personal income grew 0.5%, beating expectations. The US consumer is facing rising unemployment and slumping confidence and are reluctant to spend. Faltering spending will keep the pressure on the U.S. economy. As global stocks slid, the dollar-yen fell overnight and continued its decline in New York trading as U.S. stocks too fell deeply into the red. From its high near 106.90 late on Sunday, the pair slid more than 250 pips to an intraday low near 104.20. There was news that Wachovia was going to be bought out by Citigroup, becoming the latest financial services giant to succumb to credit crisis. Also, as U.S. lawmakers seemed unable to pass the bailout package today, the Dow Jones Index was down as much as 700 points at one point. In overnight trading, the greenback rose almost 100 pips on the Canadian dollar. After relinquishing those gains to start the New York session, the dollar was again trading near 1.04 by 1 p.m. Eastern. By this time, oil prices had fallen more than $7 to trade below $100 a barrel. Tonight, Japan releases data on manufacturing, employment, production, and spending. Australia will post its releases on building approvals, retail sales, and private sector credit. Overnight, we get the flash estimate of consumer prices from the Eurozone, employment change from Germany, and GDP and investment data from the UK. Tomorrow, Canada posts its GDP and PPI, while the US releases data on housing prices and consumer confidence. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.